Question 1. Regulatory framework. Which of the following statements best describes the implications of the Health Insurance Portability and Accountability Act, HIPAA, for long-term care insurance policies? A. HIPAA allows long-term care insurers to deny coverage based on pre-existing conditions. B. HIPAA mandates that long-term care insurers must provide coverage for all services related to long-term care. C. HIPAA ensures that consumers' health information is kept private and secure, affecting how insurers handle personal data. D. HIPAA requires long-term care insurers to offer guaranteed renewable policies to all applicants. Answer. C. Explanation. HIPAA primarily focuses on protecting individuals' health information and ensuring privacy and security. It requires healthcare providers, including insurers, to implement safeguards to protect sensitive patient data. This regulation impacts long-term care insurance by mandating how insurers manage and disclose personal health information. Option is incorrect, as HIPAA does not permit denials based solely on pre-existing conditions that is determined by state laws and policy terms. Option B is incorrect because HIPAA does not mandate coverage for services but regulates privacy. Option D is also incorrect, as HIPAA does not dictate policy terms regarding renewability. Question 2. Claims process. Anita files a claim for her long-term care insurance after being diagnosed with a chronic illness that requires her to receive care in a nursing home. The insurance company delays processing her claim. According to South Carolina regulations, what action should Anita take next? A. Contact the South Carolina Department of Insurance to report the delay. B. Wait for 60 days before taking any action, as that is the standard processing time. C. Immediately file an appeal without contacting the insurer. D. Send a follow-up letter to the insurer requesting an update on her claim status. Answer. D. Explanation. In the claims process, it is crucial for insured individuals to maintain communication with their insurers. Sending a follow-up letter serves as a reminder and documentation of her claim status, prompting the insurer to expedite processing. Option A could be a valid step if the delay continues, but it is not the immediate action recommended. Option B is incorrect. While insurers do have specific processing times, it's advisable not to wait without inquiry. Option C is also incorrect, as an appeal should be based on a denial rather than simply a delay. Proactive communication is essential first. Question 3. Scenario-based question. John is 70 years old and is considering purchasing a long-term care insurance policy to prepare for potential future care needs. During his discussions with an insurance agent, he learns that he has a pre-existing condition related to his cardiovascular health. Given this scenario, what should John primarily consider regarding his eligibility for long-term care insurance? A. He should only focus on the daily benefit amount that the policy provides. B. He should inquire about the underwriting process and how his pre-existing condition may affect his eligibility and premiums. C. He can assume he will be denied coverage due to his pre-existing condition, so he should not apply. D. He should select the first available policy without comparing options. Answer. B. Explanation. John should actively inquire about how his pre-existing condition will influence both his eligibility and the premiums he may face. Insurers often consider pre-existing conditions during the underwriting process, which can lead to higher premiums or exclusions. This understanding is crucial for making informed decisions regarding policy selection. Option is incorrect, as focusing solely on benefits without understanding the implications of his health status could lead to inappropriate policy choices. Option C is misleading, and while a pre-existing condition may affect coverage, it does not automatically result in denial. Option D is also incorrect. A thorough comparison and research are vital in selecting the right policy. Question 4. Types of LTC insurance policies. Which of the following is a key difference between traditional long-term care insurance policies and hybrid long-term care insurance products? A. Traditional policies typically offer more flexible benefit options than hybrid products. B. Hybrid policies often combine life insurance or annuities with long-term care benefits, providing an alternative to cash value. C. Traditional policies have guaranteed renewability, while hybrid products do not. D. Hybrid policies are exclusively available to individuals over 65 years old, whereas traditional policies can be purchased by younger individuals. Answer. B. Explanation. Hybrid long-term care insurance products combine life insurance or annuities with long-term care benefits, which can provide a more versatile approach to funding care while offering a death benefit. Option A is incorrect. Traditional policies may not necessarily have more flexible benefits. Option C is misleading because many hybrid policies also have guaranteed renewability features. Option D is false. The hybrid policies are not restricted by age as long as the individual meets the underwriting requirements. Question 5. Underwriting and eligibility. During the underwriting process, an insurer reviews an applicant's health history. Which of the following factors is least likely to be considered when assessing eligibility for long-term care insurance? A. The applicant's age at the time of application. B. The applicant's smoking history. C. The applicant's family history of chronic illnesses. D. The applicant's preferred daily benefit amount. Answer D. Explanation. While the preferred daily benefit amount is important for determining policy coverage and premiums, it is not a factor in assessing eligibility during the underwriting process. The insurer focuses primarily on health-related factors such as age, A, smoking history, B, and family history of chronic illnesses, C, to evaluate risk. Options A, B, and C all directly affect the underwriting assessment and potential premiums. Question 6. Ethical and legal considerations. An insurance agent discovers that a client has a cognitive impairment that has not been disclosed in the application for long-term care insurance. What is the ethical course of action for the agent in this situation? A. Proceed with the application as the client may not be aware of the implications. B. Inform the insurer about the client's cognitive impairment to avoid future claims issues. C. Advise the client to purchase the policy and hope that the impairment will not affect future claims. D. Encourage the client to disclose the cognitive impairment before finalizing the application. Answer D. Explanation. The ethical course of action is to encourage the client to disclose their cognitive impairment before finalizing the application. Transparency is crucial in the insurance process, and non-disclosure can lead to denied claims in the future. Option is unethical and potentially illegal as it could misrepresent the client's risk. Option B could violate confidentiality and harm the client, while option C ignores the ethical responsibility to ensure that the client is fully informed. Question 7. Claims process. When filing a claim for long-term care benefits, which of the following is typically NOT-required documentation? A. Proof of the care services provided. B. A signed release of medical records from the insured. C. A letter from a family member stating the need for care. D. A completed claim form provided by the insurance company. Answer C. Explanation. A letter from a family member stating the need for care is typically not required documentation when filing a claim. Required documents usually include proof of care services. A. A signed release of medical records. B. And the completed claim form. D. Provided by the insurer to ensure that all necessary information is accurately submitted for assessment. Option C is not a standard requirement and may not provide sufficient substantiation for the claim. Question 8. Payment structures and financing. Which of the following statements regarding premium payment options for long-term care insurance is most accurate? A. Premiums for long-term care insurance can only be paid annually. B. Monthly payment options often lead to higher overall costs compared to annual payments due to administrative fees. C. Long-term care insurance premiums are tax deductible for all policyholders regardless of income level. D. Premiums must be paid in full at the time of application to secure coverage. Answer B. Explanation. Monthly payment options typically incur additional administrative fees, leading to higher overall costs compared to annual payments. Option A is incorrect because many insurers offer flexible payment plans, including quarterly and semi-annual options. Option C is misleading. While some premium payments may be tax deductible, eligibility is often contingent upon the policyholder's adjusted gross income and specific tax regulations. Option D is incorrect, as premiums can usually be paid on a schedule rather than all at once. Question 9. Market trends and challenges. Which of the following challenges is currently faced by the long-term care insurance market? A. Decreasing demand for long-term care services due to technological advancements. B. An increasing number of insurers entering the market, leading to greater competition. C. The aging population significantly increasing the demand for long-term care services. D. Stricter underwriting guidelines that have made policies more affordable. Answer C. Explanation. The aging population is a significant factor driving increased demand for long-term care services, leading to market challenges in providing adequate coverage and resources. Option is incorrect, as demand for services is actually increasing, not decreasing. Option B is misleading. While competition exists, many insurers are exiting the market due to financial challenges rather than entering. Option D is false, as stricter underwriting guidelines often make policies less affordable for those with health issues. Question 10. Consumer education and counseling. What is one of the key responsibilities of an insurance agent when providing counseling to clients considering long-term care insurance? A. To ensure clients select the policy with the lowest premium regardless of coverage. B. To provide clients with all available policy options and help them understand the implications of each. C. To discourage clients from asking too many questions to speed up the process. D. To promote hybrid policies over traditional ones without considering individual needs. Answer B. Explanation. One of the key responsibilities of an insurance agent is to provide clients with all available policy options and help them understand the implications of each. This ensures that clients make informed decisions based on their specific needs and circumstances. Option is misleading, as selecting the lowest premium may not provide adequate coverage. Option C is unethical. Clients should feel encouraged to ask questions to ensure they fully understand their options. Option D is incorrect, as agents should not promote one type of policy over another without assessing the client's individual needs first. Question 11. Types of LTC insurance policies. Which statement correctly differentiates between individual and group long-term care insurance policies? A. Individual policies usually have lower premiums compared to group policies. B. Group policies typically provide more personalized coverage options than individual policies. C. Individual policies are underwritten based on personal health history, while group policies may not require individual underwriting. D. Group policies can only be purchased by employers for their employees. Answer C. Explanation. Individual long-term care insurance policies are underwritten based on the applicant's personal health history, which can affect eligibility and premiums. In contrast, group policies often do not require individual underwriting, as they cover a larger pool of people, reducing the risk for insurers. Option A is incorrect. Individual policies often have higher premiums due to tailored coverage. Option B is misleading. Group policies generally have standardized coverage options. Option D is also inaccurate, as group policies can sometimes be offered through associations or organizations, not just employers. Question 12. Fundamental concept of long-term care insurance. What is the primary purpose of long-term care insurance? A. To cover medical expenses incurred during hospitalization. B. To provide financial support for services related to daily living activities and long-term care needs. C. To replace lost income due to disability. D. To offer a death benefit to beneficiaries upon the policyholder's passing. Answer B. Explanation. The primary purpose of long-term care insurance is to provide financial support for services related to daily living activities and long-term care needs, such as personal care services, nursing home care, and home health care. Option is incorrect, as long-term care insurance does not primarily cover hospitalization. Option C is misleading. That is the function of disability insurance. Option D is incorrect, because while some policies may offer a death benefit, the core focus is on care services rather than life insurance coverage. Question 13. Consumer education and counseling. Which of the following is the best practice for an insurance agent when educating a consumer about long-term care insurance? A. Provide a one-size-fits-all policy recommendation based on general assumptions. B. Encourage the consumer to purchase the most expensive policy for better benefits. C. Assess the consumer's individual needs and preferences before discussing policy options. D. Dismiss the consumer's concerns about affordability and emphasize only the benefits of long-term care insurance. Answer C. Explanation. The best practice for an insurance agent is to assess the consumer's individual needs and preferences before discussing policy options. This tailored approach ensures that consumers receive relevant information that aligns with their unique situations. Option is incorrect, as it ignores individual circumstances. Option B is misleading. Agents should not pressure clients into expensive policies without assessing their needs. Option D is also incorrect. Addressing affordability is crucial in helping consumers make informed decisions. Question 14. Claims process. Which of the following best describes the steps involved in the claims process for long-term care insurance? A. Claims are automatically approved without any required documentation. B. The insured submits a claim form, provides required documentation, and the insurer evaluates the claim for approval. C. The insurer contacts the insured for additional information only after the claim has been filed. D. The insured must wait 90 days for the claim to be processed without any communication from the insurer. Answer B. Explanation. The claims process for long-term care insurance typically involves the insured submitting a claim form, providing required documentation such as proof of care services, and the insurer evaluating the claim for approval. Option is incorrect. Two claims require documentation for validation. Option C is misleading. Insurers usually request additional information during the evaluation process, not after filing. Option D is incorrect. While processing times vary, insured individuals should not wait without inquiry regarding their claim status. Question 15. Payment structures and financing. In terms of financing long-term care insurance, which statement is most accurate regarding tax implications? A. All long-term care insurance premiums are fully tax deductible regardless of the policyholder's income level. B. Tax deductions for long-term care insurance premiums are available based on the policyholder's age and income. C. Premiums are not tax deductible for any policyholder regardless of their situation. D. Long-term care insurance benefits received are fully taxable as income. Answer B. Explanation. Tax deductions for long-term care insurance premiums are available based on the policyholder's age, with limits varying according to the IRS guidelines. As individuals age, the deduction limits increase. Option is incorrect. Deductions depend on specific criteria and are not universally available. Option C is misleading. While not all situations allow for deductions and due based on age and other factors. Option D is false. Benefits received from long-term care insurance are generally not taxable as income if used for qualified long-term care expenses. Question 16. Ethical and legal considerations. If an insurance agent knowingly misrepresents policy benefits to a client, which ethical principle is being violated? A. Honesty and transparency. B. Confidentiality of client information. C. Fair competition among agents. D. Professional competency in providing accurate information. Answer A. Explanation. Misrepresenting policy benefits violates the ethical principle of honesty and transparency, which requires agents to provide accurate and truthful information to clients. Option B pertains to privacy but is not relevant to misrepresentation. Option C is not applicable in this context, as it deals with market competition rather than client interaction. Option D, while important, focuses on the agent's knowledge rather than the specific act of misrepresentation. Question 17. Market trends and challenges. What is a significant challenge currently affecting the long-term care insurance market? A. The rapid decline in the elderly population due to improved health care. B. Increasing premiums and the withdrawal of insurers from the market. C. A surge in the number of new insurers entering the market, driving premiums down. D. Decreased awareness of long-term care insurance among consumers. Answer B. Explanation. The long-term care insurance market is facing significant challenges due to increasing premiums and many insurers withdrawing from the market, which can limit options for consumers and increase costs. Option is incorrect. The elderly population is increasing, leading to higher demand for services. Option C is misleading. While some insurers may enter the market, many are exiting due to financial challenges. Option D is also incorrect. Awareness of long-term care insurance is generally increasing due to marketing and education efforts. Question 18. Problem-solving skills. When evaluating an insurance claim for long-term care, which factors should be prioritized to ensure compliance with policy guidelines? A. The insurer's previous claims processing history. B. The applicant's specific needs and circumstances at the time of the claim. C. The average cost of long-term care services in the region. D. The insurer's financial stability. Answer B. Explanation. Prioritizing the applicant's specific needs and circumstances ensures that the claim is evaluated fairly according to the terms of the policy. This involves assessing the nature of the care required and whether it aligns with covered benefits. Option is less relevant to historical processing, does not directly impact the current claim. Option C, while important for understanding the market, does not dictate compliance with policy guidelines. Option D is important but focuses on the insurer rather than the specific claim evaluation. Question 19. Fundamental concepts of long-term care insurance. Which of the following accurately reflects the difference between long-term care insurance and traditional health insurance? A. Long-term care insurance primarily covers medical expenses associated with illness. B. Traditional health insurance generally covers a wide range of long-term care services. C. Long-term care insurance is designed to assist with activities of daily living, adults, and custodial care. D. Traditional health insurance policies provide unlimited benefits for long-term care. Answer: C. Explanation. Long-term care insurance is specifically designed to assist with activities of daily living, adults, and custodial care, which are not typically covered by traditional health insurance. Option A is incorrect because long-term care insurance is not primarily for medical expenses. Option B is misleading. Traditional health insurance often has limited coverage for long-term care services. Option D is false, as traditional health insurance policies usually have limitations and do not provide unlimited benefits for long-term care. Question 20. Regulatory framework. Which of the following is a consumer protection requirement under South Carolina long-term care insurance regulations? A. Insurers must offer all applicants guaranteed coverage regardless of health status. B. Insurance agents must provide a free look period for all new policies sold. C. Insurers are required to deny coverage based on age alone. D. Policy illustrations must include a disclaimer about potential future premium increases. Answer: D. Explanation. Policy illustrations are required to include a disclaimer about potential future premium increases, ensuring that consumers are aware of possible changes in their financial obligations. Option A is incorrect, as insurers are not mandated to offer guaranteed coverage to all applicants, especially those with health issues. Option B is misleading. While a free look period is common, it is not universally required for all policies. Option C is false. Insurers cannot deny coverage based solely on age. Underwriting guidelines consider multiple factors. Question 20 on underwriting and eligibility. Which factor is most commonly used in the underwriting process for long-term care insurance? A. The applicant's income level. B. The applicant's family medical history. C. The applicant's credit score. D. The applicant's marital status. Answer: B. Explanation. The applicant's family medical history is a critical factor in the underwriting process for long-term care insurance, as it can indicate potential risks for chronic conditions that may require long-term care. Option is less relevant, as income typically affects affordability rather than eligibility. Option C is not generally considered in health insurance underwriting. It's more relevant to loan approvals. Option D may be considered but does not have as significant an impact as family medical history. Question 22. Claims process. When a long-term care insurance claim is denied, what is the first step a policyholder should take? A. Immediately file a lawsuit against the insurer. B. Contact the insurer to request a detailed explanation for the denial. C. Wait 30 days to see if the insurer changes its decision. D. Reapply for coverage with a different insurer. Answer: B. Explanation. The first step a policyholder should take when a claim is denied is to contact the insurer to request a detailed explanation for the denial. This allows the policyholder to understand the reason for the denial and to gather the necessary information for an appeal if warranted. Option is premature and may not resolve the issue. Option C is not proactive. Awaiting may not lead to a change in the insurer's decision. Option D may not be practical, as the same underlying issues may affect future applications. Question 23. Ethical and legal considerations. Which of the following actions by an insurance agent would most likely be considered a violation of ethical standards? A. Providing clients with information on various policy options. B. Pressuring clients to purchase coverage that exceeds their financial means. C. Explaining the benefits and limitations of long-term care insurance. D. Offering clients a variety of payment plans for their policy. Answer: B. Explanation. Pressuring clients to purchase coverage that exceeds their financial means is a clear violation of ethical standards, as it disregards the client's financial situation and needs. Option A is appropriate behavior, as providing information is essential for informed decision-making. Option C is also ethical. Clients should understand both benefits and limitations. Option D is acceptable, as offering payment plans helps clients manage affordability. Question 24. Consumer education and counseling. What is the primary responsibility of insurance agents when counseling clients about long-term care insurance? A. To sell the most expensive policy to maximize their commission. B. To ensure clients fully understand the terms, benefits, and limitations of the policy options available to them. C. To discourage clients from seeking second opinions about their insurance needs. D. To complete all necessary paperwork for the client without their involvement. Answer B. Explanation. The primary responsibility of insurance agents when counseling clients is to ensure they fully understand the terms, benefits, and limitations of the policy options available. This ethical duty helps clients make informed decisions based on their needs. Option is unethical as it prioritizes agent profits over client welfare. Option C is misleading. Agents should encourage informed decision making, including seeking second opinions. Option D undermines the client's role in their insurance decisions and is not a best practice. Question 25. Practical applications and case studies. Mr. Thompson is a 62-year-old retiree considering purchasing long-term care insurance. He is currently in good health but has a family history of Alzheimer's disease. Which of the following should Mr. Thompson prioritize when evaluating his insurance options? A. The lowest premium available regardless of coverage. B. Policies that offer comprehensive coverage for a variety of services and have flexible benefit triggers. C. Policies that focus solely on nursing home care. D. Insurance options that require no underwriting. Answer B. Explanation. Mr. Thompson should prioritize policies that offer comprehensive coverage for a variety of services and have flexible benefit triggers, particularly given his family history of Alzheimer's disease, which may lead to future care needs. Option A is short-sighted and the lowest premium may not provide adequate coverage. Option C is too limited and long-term care needs can extend beyond nursing home care. Option D is not advisable as policies that require no underwriting may be more expensive and less beneficial in the long run. Question 26. Long-term care partnership programs. Which of the following accurately describes a long-term care partnership program? A. It provides unlimited coverage for long-term care services without any eligibility criteria. B. It allows policyholders to protect a certain amount of assets while qualifying for Medicaid after benefits are exhausted. C. It requires all participants to have pre-existing conditions to qualify. D. It mandates that individuals purchase policies through government-approved insurers only. Answer B. Explanation. A long-term care partnership program allows policyholders to protect a certain amount of their assets while qualifying for Medicaid after the long-term care insurance benefits are exhausted. This program encourages individuals to plan for future care needs without risking their financial stability. Option is incorrect. These programs do not provide unlimited coverage. Option C is misleading. Having pre-existing conditions is not a requirement for participation. Option D is inaccurate. Individuals may choose from various insurers, not just government-approved ones. Question 27. Market trends and challenges. What is one of the significant impacts of the aging population on the long-term care insurance market? A. Decreased demand for long-term care services. B. Increased risk of policyholders needing benefits leading to higher premiums. C. Lower overall costs of long-term care insurance policies. D. A reduction in the number of insurance providers in the market. Answer B. Explanation. The aging population leads to increased risk of policyholders needing benefits, which in turn results in higher premiums as insurers adjust to the growing demand for long-term care services. Option is incorrect. The demand is increasing due to a larger elderly population. Option C is false. Costs are generally rising as claims increase. Option D may occur as some insurers exit the market, but the primary impact is on premium increases due to higher risk. Question 28. LTC insurance policies. Which of the following features is unique to hybrid long-term care insurance policies? A. They only provide coverage for nursing home care. B. They combine life insurance benefits with long-term care coverage. C. They require a higher premium than traditional long-term care policies. D. They have no restrictions on the length of coverage. Answer B. Explanation. Hybrid long-term care insurance policies combine life insurance benefits with long-term care coverage, allowing policyholders to utilize the benefits for either long-term care services or as a death benefit. Option A is incorrect. The hybrid policies do not limit coverage to nursing home care. Option C may vary, but is not universally true, as some hybrid policies may have competitive premiums. Option D is misleading. Hybrid policies may still have limitations on the length of coverage. Question 29. Ethical and legal considerations. What legal obligation do insurers have regarding disclosures when selling long-term care insurance? A. Insurers must provide all possible benefits without limitations. B. Insurers are required to disclose policy limitations and exclusions clearly to the policyholder, C. Insurers do not need to inform clients about the potential for premium increases. D. Insurers must guarantee approval for every applicant regardless of health status. Answer: B. Explanation. Insurers are legally obligated to disclose policy limitations and exclusions clearly to the policyholder to ensure informed decision-making. This requirement is a key consumer protection measure. Option A is incorrect. Insurers can have limitations. Option C is misleading. Insurers should disclose potential premium increases. Option D is false. Insurers can deny coverage based on health assessments. Question 30. Payment structures and financing. Which of the following statements accurately reflects payment options for long-term care insurance premiums? A. All long-term care insurance premiums must be paid annually. B. Policyholders can choose from various payment options, including monthly, quarterly, and annual payments. C. Premiums can only be paid using tax-advantaged accounts. D. Once a payment option is chosen, it cannot be changed in the future. Answer: B. Explanation. Policyholders can choose from various payment options, including monthly, quarterly, and annual payments, allowing for flexibility based on individual financial situations. Option is incorrect as it limits payment methods. Option C is false. Premiums can typically be paid through standard means. Option D is misleading. Many policies allow for changes in payment options after the initial choice.